Capital B Talks with Eric Weiss today, very special guest and a great builder in the Bitcoin space, the man that is at the origin of Bitcoin treasury companies before they existed, because you gave the idea to Michael of Bitcoin. And so I'm glad to say that you changed or contributed to change the course of history and the course of market volatility as well. So we will talk about all of this. For those who don't know, Capital B is Europe's first and largest Bitcoin treasury company. And Eric has been as well involved in the space and more recently with Orange in Brazil. So I think it will be a very fun conversation to get more into the model and get straight into the market volatility that we can observe today. The goal of this podcast actually is to provide a view of Bitcoin and take a step back and have a better view and understanding of actually what is a Bitcoin treasury company and what is behind and why there is volatility, why there are premiums or not, what is actually the business model, and what is the actual game that we are in with fiat, with Bitcoin and Bitcoin capital markets, and the adoption of Bitcoin at scale. So, Eric, it would be very good, I think, to start with a quick background on your Bitcoin story and
Sure.
what that can tell as well with all the cycles that you've been through and what the market context of today makes you think about.
Sure. Thanks for those very kind, flowery words. I think you overstated my contribution a little, but thank you for that. Um, yeah, I bought my first Bitcoin in 2013. Prior to that, I was in traditional finance, investing primarily in venture capital in internet-related companies. So we got pretty good at understanding what the internet was good for and what the internet was not good for. It was good for transmitting information. It was not good for transmitting value or transacting or even doing e-commerce due to the lack of security. And so when I saw Bitcoin for the first time at a conference here in Miami, I was blown away that the internet could be used to transfer value, and that's when I got involved. So there have been a lot of ups and downs, as you alluded to, with respect to the volatility, but this is not unique to Bitcoin. For example, Amazon had lost since Amazon was a public company. Bitcoin didn't have any life as a private company, right? So it's had to live through all its growth years as public in front of everyone. But since Amazon was a public company, it lost 80% of its value 6 times in its life and 90% of its value 1 time. So there's volatility with technology adoption, and it takes time, a lot of time. So I think Bitcoin, relative to the adoption of other technologies, be it mobile phones, the internet, is moving at a pace that is clearly unprecedented. And so I think if you're a trader, it's great. There's plenty of volatility for you to trade. We're probably the most fun thing that you can trade. But if you're an investor and you're looking to create long-term wealth or protect the money that you have, um, the volatility is kind of irrelevant. You should only be putting into Bitcoin money that you don't need for a minimum of 4 years and hopefully longer. And if you have that type of view on time with respect to your investment, then the volatility doesn't really affect you. And then, people used to say, "Oh, buy the dips. It's a gift." And I thought that was like a nice thing to say, and it sounded cute. But I have to admit that, like in the beginning, I didn't feel that way at all. It was like very emotional, and it hurt, and I was upset about the dips. Now I genuinely do view the dips as a sale, and I do get excited about buying dips now.
So, what translates into what you said about Bitcoin, into the Bitcoin treasury company space, where we see indeed cycles where the share price can go up 2,000, 3,000, 4,000% and more, and then go down 70, 80% down. Is there as well intrinsic value in a Bitcoin treasury company? What are, in your view, the factors or the valuation uh, factors that you think are important for investors when
Sure.
looking at this? And what is, in fact, the business model that you see is compelling for a Bitcoin treasury company to justify a premium for investors?
So let's start at a higher level and just talk a little bit about what a Bitcoin treasury company is and why it should exist, right? So the majority of the capital in the world is institutional capital, professional investing capital. 99% of that capital cannot buy a commodity. Bitcoin is a commodity. So 99% of the world's institutional capital cannot buy Bitcoin. So what treasury companies are is you're wrapping Bitcoin in a security that 99% of the world's capital can actually purchase. So you're securitizing Bitcoin. Okay. So that's the first step and why these companies actually matter, right? For example, just to break it down very specifically for people, let's say you have an emerging markets equity fund and you're investing in Brazilian equities, and all you can buy are Brazilian equities, and you've raised $500 million to do this. You can't buy Bitcoin. You can't even buy an ETF because they're cute and it's a look through, and they're not okay with that. But you can now buy Orange BTC in Brazil, which is a Bitcoin treasury company. And by doing so, you escape the currency risk of the Brazilian real. You escape the geopolitical risk. You escape a lot of these risks, and you get exposure to Bitcoin. So big, and the same in France and Europe, etc. So what Bitcoin treasury companies are doing is they're securitizing Bitcoin all over the world, which is phenomenal. Why do these companies deserve or not deserve a premium to their net asset value? Meaning, why should they trade at a greater value than the Bitcoin they hold? And the answer is very simple. It's because they plan to acquire Bitcoin accretively, meaning shareholders one day will go to sleep and the next day they will wake up and they will have more Bitcoin per share than they did the day before. That's worth a premium. If you're going to give me free Bitcoin, I'm going to have to pay for that, right? So there's a premium to the net asset value. And that premium can be generated a number of ways. The most simple way and the best way is by issuing equity. If you're already getting a premium to your net asset value, you can sell more equity into the market, right? Get that premium on your equity, take 100% of the proceeds, less direct expenses that you receive, and you can purchase new Bitcoin with it for your shareholders. And if you do that, every shareholder benefits because you've acquired Bitcoin in a way that's accretive on a per share basis. That's the holy grail. There's no risk to the company. It's permanent capital. There's no debt to be called. It's great. The next step is you can issue credit. So you can issue some form of credit, debt, preferred stock, convertible bonds, whatever it is, whatever you think you have an advantage to issue. And you can issue that credit in a way that allows you to bring in capital without issuing more equity shares. So it's not dilutive on a per share basis. And then you add the Bitcoin to those people's shares. That's accretive as well. So that's why a Bitcoin treasury company warrants a premium and gets a premium. The volatility that you alluded to plays a role in this as well. Those credit securities that you're issuing have greater value to the buyers of them if they have volatility embedded in them. And the underlying volatility of Bitcoin comes through these credit instruments, right? When you price them in the form of selling them to the public or investors, and that benefits both the purchasers of these new assets and it benefits the company that's raising the capital because they're able to give investors something that's a little more interesting. that's got movement. They can trade it, they can play around with it, etc. So that's kind of how all these things come together.
And what are, in your view, the concepts in Bitcoin treasury companies that are not grasped yet by the investor community at large? I know that, in fact, yes, a lot of institutional capital is coming to Bitcoin, and we can get back to this. But as well, we can see a lot of concerns on social media in terms of when a company has a premium that is going down. Yes, you can issue credit, but for some companies it can get a bit difficult and so on. What do
Yes.
you think is the key aspects that differentiate between a Bitcoin maximalist that do see the major advantage of a Bitcoin treasury company over the medium to long term and the capacity to provide outsized amplifying Bitcoin returns through
Hmm.
intelligent leverage, and another side of the market that is frankly more looking at fiat short to medium term returns that can see the premium as a risk as well. And so, where do you see in your conversations with institutional allocators or with investors overall the things that are not yet completely understood or that should be explained a bit more?
Yeah, there's a lot in that question. So I think that the issuance of debt is the clearest, most understandable way to add Bitcoin per share in a way that is accretive to the equity holders, right? Because you're not issuing new shares to do it. The challenge with that is um, debt is very dangerous. And in my personal view, this debt should be reserved for, I don't want to say a last resort, but let's say a rainy day for a Bitcoin treasury company. So when your premium to net asset value comes down and you're during a time period where you want to get your premium to NAV back up, issuing debt is a great way to do it. However, if you've already issued too much debt relative to your equity or your Bitcoin holdings, you lose that option. And when you become a debt laden treasury company, that is where the massive existential risk to this company is, right? A lot of these debt um, vehicles require one to pledge their Bitcoin in order for this financing. So, number one, uh, you might say, okay, I like to borrow 100 million, dollars to buy Bitcoin, and some lender says that's great. We'll give you great terms. You just have to put up 200 million of Bitcoin collateral because it's so volatile, and they have a lien on your Bitcoin, so your Bitcoin is now encumbered. And then if you have a misalignment with either the maturity of that debt, the price of Bitcoin in a volatile cycle, or the duration of that debt is not long enough for you to be protected, that's when these companies can enter into some very dangerous scenarios. And so I think treasury companies need to be very responsible in A, having very long duration debt, B, not having too much debt, and C, having terms of the debt that are not hindering the rest of their business, right? Because the last thing you ever want to do as a treasury company is have to sell your Bitcoin for some other purpose. So I think that's not widely understood. I also think that a lot of the pure treasury companies um, are spending too much time looking for ways to diversify themselves in the market. And if you look at strategy, for example, they're not engaging in all kinds of options trading and all different business lines, trying to generate profit. They're very simply a Bitcoin treasury company with a relatively small now software business that generates some cash flow. I think you want to keep things simple for investors, right? And so if you have an operating business, Hopefully it's a profitable operating business that generates some cash flows. Great. But keep it simple. Don't become this conglomerate. And I'm seeing over differentiation there. And on that point, a topic that I guess I would like to discuss is the rehypothecation of Bitcoin. And so a lot of these Bitcoin treasury companies, and they're not the only ones, there are Bitcoin miners that do this as well. These are massive holders collectively of Bitcoin, right? And as Bitcoiners, we have this perception that this is great from a supply demand point of view. A lot of Bitcoin is being taken out of circulation by good, strong, diamond hand holders. And this is not what's being sold on the exchanges when we sit here and wonder, where are all these sellers coming from? But when these groups rehypothecate their Bitcoin because they feel compelled to generate some yield, some de minimis 5% yield or something on their Bitcoin, that's exactly what's happening is they're putting their Bitcoin back into circulation. And the only people who want to borrow this Bitcoin are people who want to short Bitcoin. There's no other reason to borrow the Bitcoin. If you wanted to buy the Bitcoin, you would just go buy the spot Bitcoin. You don't need to borrow it, right? So these people are, when you rehypothecate the Bitcoin, you are adding to the problem of too much liquidity and too much Bitcoin for sale. And I wish more treasury companies understood this and valued that.
Well, I guess it's not that public for Bitcoin treasury companies because I've not seen a lot of Bitcoin treasury companies announce that, at least very straightforward in
No,
the
they
sense.
don't say that. They don't
How,
say that at all. What they say is they're going to generate yield on their Bitcoin. That's what
yes,
they say.
yeah.
If you know of another way to generate yield, please tell me. I would love I would love to know how.
Well, you mentioned two very important things, and within this there are a lot of course, details, but that's something where we very much align. It's the long-term duration. The first, the debt that we have issued is only 5 years, so it's longer than the traditional Bitcoin cycles themselves, and
Okay.
the conditions for conversion are can be met only with the traditional Bitcoin CAGR, not even accounting for the corporate actions.
Nice.
So that way, as you said, it's risk minimized and in a way that doesn't play with the liquidity of traditional markets and Bitcoin markets. And the second one is do not play with Bitcoin, because over a certain period of time, the only certainty with playing with Bitcoin is the losing of Bitcoin. So
Yes.
yeah, so that's quite important. It addresses another point you mentioned is the available supply of Bitcoin. So it seems like you are mentioning that there is other types of sellers in the market that are not or indirect selling that is happening that is not really seen. Where do you see the current market right now between, on one side, institutional capital demand that you can notice?
Hmm.
Would be great for you to give us a bit more view on this, as you are speaking with a lot of traditional allocators, and as well, and you come as well from the asset management side, and as well on the other side, what you see as sellers in the market, and what is your view on this market?
Yeah, on the institutional side, adoption is coming quickly, very quickly. Even just this past week, we saw multiple announcements from banks, big investment banks. Morgan Stanley, for example, are now going to allow their asset managers to recommend a Bitcoin allocation. They weren't allowed to do that. That starts October 15th, which I guess is tomorrow, right? So the big banks are coming, that's for sure. And I think what we're going to see is we're going to see companies that are not Bitcoin treasury companies start to hold some Bitcoin on their balance sheet. And I'll tell you why. I think there's probably like 12 to 24 months away. But I think what's happened is, and Michael has pointed this out many times, the problem that public companies have is they give back the money. They dividend out cash or they buy back stock, right? Because this is what their investors are demanding. And the truth is, the lifespan of a company is relatively short. You know, if you're lucky, 15, 20 years. But they get this arc, even if they last much longer, and then they go off to this almost dead wasteland forever, right? Um, and so what happens is because these companies have dividended out all of their money over the years, they no longer have the capital that they need to invest in capital expenditures in order to retool and be relevant again. They've given all the money back. And so I think, you can look at extreme examples like Intel, which, over the last decade has dividended out like $100 billion, right? If they had that $100 billion today, how much more competitive in the chip sector would Intel be? Insane, right? And so if they're being intellectually honest, they would have to regret some of these decisions. And I think what you're going to see is Bitcoin allows public companies to hold Bitcoin on their balance sheet without the shareholder punishing them for this. So it gives you an excuse to hang on to your capital, but it's so much better than that because it goes up relative to the fiat. So you're actually getting a better return on your capital than if you would have held it in treasuries or something else. So I think we're going to see big companies do this. I mean, there's no reason that the Googles and Microsofts and Apples of the world, couldn't put 10% of their treasury in Bitcoin and the world would be like, okay, that makes sense. So I think we're going to see more of that, which will move the needle. Um, Outside of those kinds of institutions and other treasury companies, I had a conversation yesterday. I'm not at liberty to say, but with a nation state that has already accumulated a very significant amount of Bitcoin that is contemplating more moves in the Bitcoin area. And they also shared with me that they are in conversations with many other nation states at the absolute highest level, and they're talking on a regular basis. Some of these nation states are looking to see what this one does and how it goes, but some are accumulating fast, some are accumulating slowly, and others are very actively watching. And when nation states make moves, uh, these are big numbers. So I'm excited about those prospects as well.
Do you see the American Reserve going forward?
I think that's above my pay grade. I Senator Lummis has made extraordinary efforts on behalf of Bitcoin, um, you know, among Congress and the administration. I think it would be great if the United States uh, wanted to hold some Bitcoin. I know the president has been constructive when he says any Bitcoin the government seizes, we're going to hold on to. We're not going to sell it. And he provided budget neutral ways for the Secretary of Commerce and the Secretary of Treasury, who are both big Bitcoin proponents, to accumulate more Bitcoin. And I think that, when you say budget neutral to someone who runs an agency of that size, you're talking about the ability to justify, many, many, many billions of dollars of acquisition if they wanted. Um, so I think the potential is there. I think to go further than that would probably require an act of Congress, and then it becomes extremely political to try to get members of Congress to say the US government should take taxpayer dollars and buy Bitcoin with it. I think it would be constructive. If I were a member of Congress, I would vote yes on that. But I don't think Bitcoin needs that. And I don't think it's a really high probability.
Changing gears a little bit, what has surprised you the most in Brazil and in the Orange BTC Bitcoin Treasury Company? What has surprised you the most?
You know, one of the incredible things that you are acutely aware of about Bitcoin treasury companies is the regional aspect. Bitcoin is a global asset, and for the individual who just wants to buy Bitcoin in Europe or the United States, it's kind of, you can see them asking, like, I don't understand. What's the big deal? But the reality is regulation is very strong in different regions. And there is a reason that Bank Itaú is the largest bank in Brazil, and they are not a bank of any import in the United States. And conversely, Goldman Sachs, JP Morgan, Chase, big US banks have virtually no presence whatsoever in Brazil. So this regulatory environment, particularly in finance, really has some hard lines. And so just because Bitcoin is a global asset doesn't mean that Bitcoin is readily available to people in various forms in different regions. And so what was surprising to me was just how few options um, people who want to invest in Bitcoin have in Brazil and how difficult it is. And then you think of a region, Brazil alone, 215 million people, massive natural resources, um, and these people have currency devaluations that they're facing that are very extreme. They're very familiar with that dynamic, and there's real need for Bitcoin. So, my hope is that Orange, BTC in Brazil, can do some of what Strategy did for Bitcoin adoption in North America, raising awareness, providing another access point, in particular for institutional capital. But as you know, these things build slowly. We've only been public for exactly 7 days now, almost to the minute. I think we went public at about this time last week. So it's early days, and we need to raise awareness and generate volume in the stock and execute, some of the strategies that we spoke about already.
Um, in fact, we have now currently a context where Bitcoin has fallen a little bit, and Bitcoin treasury companies overall have as well taken a hit,
Yep.
capital B as well. And there is as well a message that we can hear from some investors that there are too many Bitcoin treasury companies, or that the offer is too big and that the demand has stayed the same. And what would you tell to that investor that has maybe purchased some shares of a Bitcoin treasury company, but that would be scared right now?
I would say not all Bitcoin treasury companies are created equally, and they're not all going to succeed. Some are going to not succeed due to flaws in their business model, capital mismanagement, and a variety of other reasons. So I can't give blanket advice to holders of Bitcoin treasury companies who are, I can't say, don't worry, everything's going to be okay, because I have no idea what the idiosyncratic issues are with that particular company. That said, um, investors like to sell things when there's a risk off time in the marketplace. Investors don't sell their losers, they sell their winners. And Bitcoin has been a winner, up roughly 100% from 1 year ago today. And treasury companies have been a winner as well. And so treasury companies at their core are levered Bitcoin companies. So one has to expect that it is going to be more volatile in the same direction as Bitcoin. So if Bitcoin goes up, it's reasonable to think that your treasury company stock may go up more than Bitcoin. And when Bitcoin goes down, it's reasonable to think that your treasury company stock may go down more than Bitcoin. So I think the key is to do good due diligence at the time of investment. Invest in a team and a strategy that you have high confidence in their ability to execute, and their strategy makes sense to you. Um, and then if that's the case, I think ultimately things are going to work out well. If you're a long-term Bitcoin holder, then you'll be a long-term Bitcoin holder through a treasury company. And if they execute well, you should end up with more Bitcoin than you started.
And what made you a long-term Bitcoin holder? Because what I see as well in some fears in the market is that there is a very big gap between investors that look at Bitcoin and Bitcoin per share. And as you said, as long as the team is doing all the best things to maximize Bitcoin per share in a reasonable and conservative capital structure, then that can provide long-term outsized returns. And I
Yes.
guess that's also why you and I are involved in Bitcoin treasury companies, because we see this as the opportunity of a lifetime, because the only thing better than Bitcoin, as Michael would say, is more
More
Bitcoin.
Bitcoin. Yeah.
And that the Bitcoin treasury company, especially if it's a pure play, laser eyes focused on the maximization of Bitcoin per share through the issuance of intelligent instruments on the
Mm-hmm.
market, and in the most automatized way as well, which is quite
Mm-hmm.
important. Then in these contexts, the volatility in the short term is more opportunity than risk, as long as those conditions are met
Yeah.
from, of course, with all the nuances and details that you need to take into account for each company, jurisdiction, and so on.
Yeah.
But what made you have this long-term perspective, this level of conviction, and what do you think would help as well others?
Yeah, there are a few reasons that I'm a long-term Bitcoin holder and that it represents such a large portion of my investable capital. Not more than 100% though, I must add. I don't feel the need to take risk like that. But it's a couple fold. First and foremost is the financial component, is that there is a debasement of currency occurring, which actually Elon Musk alluded to today in a tweet, right? Specifically about Bitcoin and debasement of currency. Governments are printing too much money. The currency in every country in the world is being debased. And the hurdle rate to just keep up with the inflation that causes is incredibly challenging. One would have to be a rock star hedge fund manager, investor every single year, year in and year out, to keep up with a 7 to 10% annual debasement of your currency. And so I work hard. I don't want to lose the product of my labor. So I am a long-term holder of Bitcoin for that reason, if only to preserve wealth. If the fact that it grows at a pace that's greater than other things and it's actually wealth creation is a very nice fringe benefit. But it would be enough if it just helped me not lose money for real. And then there's a moral and ethical reason as well that is significant for me. And that is, I think that for people who live paycheck to paycheck, which is the majority of the people in the world, this is the true crime against humanity, is that governments essentially make these people indentured servants to the governments by issuing this and devaluing their currency, because the increase in wages can't possibly compete with the devaluing the currency. And so the majority, a huge portion of this group of people that live paycheck to paycheck do have some savings, right? But the savings is not huge. It's, you know, I don't know, 20 to $10,000 a month, right? Of savings that people might have. And so, what do you do with that money if you have it? It's very, very hard. So, to the extent that they can put this money into Bitcoin and start to accumulate their own stack, this is the kind of thing that can be life changing for them. And I've seen this in my own family, where I have encouraged family members um, who are, not super well off to buy Bitcoin. And that was many years ago. And now they have a nest egg of wealth that is giving them freedom. And it's not extraordinary wealth, but it is life changing for them. And so I really think that Bitcoin is a tool of empowerment, and that's another reason I'm a long-term holder.
Do you think Bitcoin treasury companies are also playing a role in this? Uh,
Yeah.
we we often talk about like the Trojan horse into capital markets and so on. We talked about the risk. We talked about as well some of the downfall potential if it's not well managed and so on. On the other side, what do you see as a great potential for Bitcoin treasury companies, and how that has an effect as well, a positive effect overall? Because yes, it is of course something that can provide outsized returns. At the same time, if we are all doing this, is because it's also very good for Bitcoin adoption, and Bitcoin standard on global capital markets. So, what's your medium to long term vision on this, and the overall motivation as well?
So and this will address an earlier question you asked. I don't understand the concept of how there could be too many Bitcoin treasury companies. I think you have to think about it from the company's point of view. And why wouldn't a company that has money have a Bitcoin treasury? So I think every company, public or private, that has capital that they don't need for a significant period of time should be a Bitcoin treasury company. And I don't think it's really about consumer investor demand for that. The company has to do what's right for the company in order to stay alive, and that's right for the company. And if the shareholders of that company want their company to stay alive and thrive, then they should be supportive of a Bitcoin strategy. And so that's one point. And another question you asked was, are the treasury companies actually doing anything, adding any value, right? And so, like, let's look at Orange BTC in Brazil, just because I'm familiar with it. And there are these idiosyncratic things in every region, as you can certainly speak to at length. But in Brazil, if you own Bitcoin and you sell your Bitcoin, you pay 25% tax. If you own a publicly listed stock in Brazil and you're Brazilian and you sell that publicly listed stock, you pay a 15% tax. So there's a massive tax arbitrage to hold Bitcoin through a public treasury company in Brazil. In addition to that, there are all kinds of people in the world. A lot of Bitcoiners take for granted that not everybody is tech savvy, wants to be tech savvy. A lot of people do not want the responsibility of having their own private keys. That's a headache that they don't want, whether they're just a young person who doesn't want that responsibility or isn't tech savvy, or an older person who it's just uncomfortable for them. But there are a lot of those people who would like exposure to Bitcoin who are just most comfortable calling that Morgan Stanley person, right? And saying, hey, buy me some of, XYZ treasury company. And that's how they get their exposure. So it's offering a lot of value. And that value in the States is less because there's more to choose from. But you go to a region like Europe or Brazil or others, and there's not a lot to choose from. And so there, I think they're offering disproportionate value to that investor.
And in terms of the capital markets overall, what impacts do you think there will be because of the emergence and potential success of the largest leading Bitcoin treasury companies, like you mentioned, like Strategy, which is the best example in the US? How do you think that overall this can transform as well
Mm-hmm.
capital markets, their standard, the hurdle rate? The hurdle rate is the hurdle rate now not Bitcoin but Strategy.
Yeah. Um, I think that Bitcoin and Bitcoiners are transforming capital markets in a fundamental way. I think there is a growing impatience among traditional finance people and traditional investors for the market hours that stocks trade at. I think it's like 18% of the hours in a year is when the US stock market is open. So there's a more than 80% chance that when some kind of event happens, it's going to happen outside US market trading hours. So I think Bitcoin and Bitcoiners are pushing traditional finance to have market hours that are more like Bitcoin's market hours. So that's a big fundamental change. I think that the frustrations with moving capital around are really being seen by these markets, and blockchain technology in general is taking hold there, and we're going to see the financial markets change in that regard too, and more things will be on chain. I don't think that in the near term, Bitcoin is going to grow to a level where Bitcoin's performance is going to move the capital markets. I think, you know, we're still smaller than a big tech company.
Yes, which is extremely early and
Yeah,
could
it's a temporary phenomenon.
that could indicate that more volatility is to be expected as well, uh, because that will not happen very slowly. Um, from your experience, what in the past have resonated with the current market, or is the current market something that you would not have expected at all? Is there things in development that you think don't get enough attention? What do you think is not really seen from the public today in Bitcoin?
I think people don't understand still uh, just how significant the real inflation rate is. And that is because our governments go to great lengths to mislead people. So we've got a basket of goods that we measure inflation by. And every time a good becomes too expensive due to inflation, we get rid of that good from the basket and we put in another one that's, not as sensitive to inflation. So we are misleading everyone to think that the inflation rate, some CPI or something, is 3% or something ridiculous, right? So if you carry that to the next step, that investor says, well, I can purchase this piece of debt and that's going to pay me 6%. Okay, I'm making progress. I'm beating inflation. I'm going to invest in that. Or I can invest in the S&P index, which is delivering 8% per year or something, right? Maybe. And I can escape inflation this way. If they had the facts, they would realize that you're either A, locking in a real loss in terms of the bond for a period of time, which is an absolutely horrific investment, okay? Or if you're lucky, you're just keeping pace in the equity markets. And if you plot the S&P's returns with money supply, you can see this correlation is pretty darn perfect. So I think that what is not yet appreciated is the fact that Bitcoin is the best store of value we've ever seen. And store of value is a problem that faces about half of the money in the world. And if one wanted to come up with a total addressable market, right, a TAM, as they say, store of value would be the single greatest TAM that you would want to go after. And Bitcoin is the best product to address that problem.
You mentioned products. Strategy has been innovating a lot with the preferreds. There are, of course, there will be different flavors in different markets. and there will be international products, and it will definitely accelerate as well overall. Where do you see the Bitcoin treasury company market in the next 3 to 5 years? How do you think this will have evolved?
The product that Strategy put out, STRC, Stretch, is absolutely brilliant. I think that when this product becomes more widely understood, it is going to grow at a frightening rate. I think Michael is going and Strategy are going to be able to sell literally hundreds of billions of dollars of this. Like, that is not hyperbole. I really think this because they're paying 10% right now, 10 and a quarter, I think. It's monthly pay. In the United States, that's a tax-free dividend, right? So the taxable equivalent would be something like 17% or something, which is insane. Nobody's getting 17% on anything. The collateral behind it is roughly 10 to 1, right? He's got 70 billion of Bitcoin and 7 billion in total potential obligations. He's only obligated to pay the interest on it. He doesn't ever have to repay the principal. Um, and there is a mechanism in place that if the preferred stock trades below a certain price, they're obligated to raise the coupon payment. And I think by a minimum of 25 basis points, but they can raise it as much as they want. And then if it trades over a certain price, they can issue more stock, and that's how they'll raise capital. So they're kind of being forced to raise the coupon to a market rate that is going to push the stock to par value of $100. And so it's a money market alternative with monthly pay that's paying more than 2 times what a money market pays, which is taxable, and this is not taxable. So it's got no, you're not getting any of the benefit of Bitcoin as a holder, but everyone has fiat needs in life. And some of those fiat needs are predictable. So to put a portion of one's money in that would make a lot of sense. I personally did. You know, I don't do much in the fiat world. My whole life is Bitcoin, but I do have a mortgage. I have to pay the mortgage. So I put enough money in Stretch to generate a monthly coupon payment, which will cover my mortgage, tax free. So I get an arbitrage. My mortgage rate is 5 something percent, and this thing's paying 10 something percent. So I get to make 5%.
Well, that's quite exciting for the future adoption of Bitcoin in a way that as well addresses the needs of different people, and within the same investors, different needs as well, as you,
Absolutely.
and opens within the store of value case new doors, especially there. Like I would not want to be issuing a money market fund with 3 to 4%.
Yeah, I mean, I think it's going. I think it's going to change things. I really do. I think and you can do that because the return on Bitcoin is expected to be materially greater than that coupon rate, and you don't have to repay the principal. So you've got a nice time horizon in order for the Bitcoin that you purchase with the proceeds to accrete in value and allow you to buy more in a way that provides uh, adequate collateral coverage.
Do you see other types of issuances that you found interesting in the world? Or do you see the preferred type instruments as the one that will be dominating in terms of size of capital raise?
It's region dependent, right? I mean, in some regions, prefers are common in the US in particular. In a lot of other regions, they're not. So I think you have to go with a prudent structure for the region that you're in. Um, the convertible notes, they've got their challenges, but it's a beautiful concept that you can issue debt and have that debt equitize and turn into equity and never have to repay the principal and become permanent capital. And you get to know what that price that it's going to convert at is. And if that price is a premium to your net asset value, then you have done something incredibly accretive for your shareholders. So I think that there are a number of awesome products out there. We're only limited by the creativity of the people running the treasury companies. And you've done some very creative things. I know Adam Back was singing your praises to me about some of the things you've done, and you can't get a better guy in Bitcoin singing your praises than that. So congratulations. Yeah, and Guy Goins in for Orange has been, his execution's extraordinary. So there are a lot of great operators out there who will continue to innovate and come up with more great ideas. Michael's not the only one. And I think people should also heed Michael's advice and use the AIs to help you generate these structures, because a lot of times your advisors, your lawyers, your regulators, they will tell you you can't do something because it's uncomfortable for them to do it, or they're not familiar with it, or they don't want to take the time. But you can get some definitive answers about whether or not it's legal or not, or can be done. And you've just got to work with your AI to find out what's possible. And then you go to your advisors under the threat of hiring new advisors in their place and tell them, this is what I want to do, make it happen.
Yes, that's been very challenging for all the lawyers in the world, I guess, over the last years,
Yeah,
and much more so now. We are doing it as well, and it's a pre-requirement
yeah.
to any request, frankly, because you also save a lot of time
Whew, tons.
for the team and for the investors and for for the lawyers themselves as well. They get a
Absolutely.
much clearer request too, so it's very powerful.
Great.
We are getting closer to the end, Eric. What would you say to capital B shareholders that have been enduring the last 3 to 4 months of this mini bear market?
Yeah.
That could be a great lessons maybe from your capital markets, asset management, Bitcoin treasury company experience.
Hmm. Yeah, I would say it's the same thing I would say to all Bitcoin holders as well, which is, um, being, we're still very early, and being early uh, can often feel like being wrong. And those two things are not the same. Uh, if you look back, if you zoom out, as Bitcoiners say, right, and you look at the chart over time, you can see that it pretty much only goes up and to the right. And that's not going to change for Bitcoin. Fundamentally, everything is very, very good for us as Bitcoiners. You've got an administration in the United States, which, like it or not, is the most important administration from a financial point of view in the world, that is remarkably pro Bitcoin. It's not just the president of the United States, it's not just his family, it's the vice president, it's the secretary of treasury, it's the secretary of commerce, it's the head of small business lending, it is the head of Fannie Mae and Freddie Mac and Bill Pulte, and the list goes on and on and on. And we've never been in a situation where this many people in the United States government could advocate for such a precise asset. And, there's 3 more years of this ahead. So, we've had Bitcoin, and crypto more largely has had a headwind for most of the time that I've been in crypto. And now, for the first time, we have tailwinds. And so I think people should have conviction, do more research if you don't have enough conviction. And I would say buy more and enjoy the ride, knowing that the destination is going to be one that you're going to be happy to get to.
Great. Thank you so much, Eric. I think that will
Pleasure.
give a lot of work for people to get to know more about Bitcoin and Bitcoin treasury company as a new type of value creation in the world for investors and shareholders on a Bitcoin standard.
Yep.
Is there any final word on your side? Where can people find you, or what? Yeah,
Yeah,
what?
just on Twitter, I would say, yeah, my only final word is, keep stacking, hodl, um, do more research, and it's going to work out okay.
Thank you so much, Eric. See you very soon, I hope. Thank you.
Thanks for